we have a lot coming up. And then also too, again, like we pride ourselves being fully multi-chain. We're covering things from anything from Polygon, Polkadot, Cardano, Solana, and that leads up to our next panel to kind of top up and finish off the DeFi Summit here. We have amazing panelists that's going to give us an update what's going on in DeFi, especially for Solana as well. So I'm going to bring on our amazing panelists. Here we have Simon, who is our moderator, and he's a familiar face. He's at every single Dcentral, DeFi Summit, NFTCon event. No stranger to Dcentral team.
That's right. Yeah, and I work with you guys on a number of partnership and corp dev endeavors. So thank you for having me here.
No worries. Always good having you. And then let's bring on our panelists. First, we have Dan. Hey, Dan, how's it going?
Hey, Justin, how are you?
Doing good. And we'll do short, quick intros later too. And then we'll have Will Barnes. How's it going?
What's up, guys?
And then was it Amin?
Yes, awesome. That's me. Great to be here.
All right, well, I'll give the floor to you guys and let you guys do the quick intro.
Great. Well, yeah, thank you guys all for joining us. We'd love to start off with a quick round table on your backgrounds in your companies before we jump into like deeper conversation. So let's start off with Dan. That'd be great.
Yeah. Hey, so my name's Dan Gunsberg. I'm a co-founder of Hxro Network. We're building a fully decentralized risk margining settlement clearing layer, a primitive software for derivatives on the Solana blockchain. My background has been largely in the proprietary traditional derivatives markets. Was there for about 25 years, about 30 years all in derivatives as a whole. I got into crypto in 2015, and then I at the time was a chief operating officer of a large proprietary trading firm, and left in 2017 to go into crypto full time, and here we are today.
Great. All right, go ahead, Will, and we'll finish off with you, Amin.
My name's Will Barnes, co-founder and CEO at Jet Protocol. Jet is what I would say the next evolution of borrowing and lending on a crypto network, really building upon the successes of what you saw Compound and Aave do, but with the basic premise that pooled lending is and dynamic interest rates is sort of basically going to be a thing of the past, and borrowers and lenders want fixed rate or fixed term lending or bonds in general that offer more risk management tooling. And yeah, we've been building this V2 protocol, which tackles all these issues, along with a DAO and a really process-oriented DAO for decision making.
Fantastic. And I mean, hear more about Relay.
Or Rally. Thank you. Yes, my name is Amin. I am a core contributor for the Rally ecosystem DAO. And our group is primarily focused on funding Web3 startup projects that are building on the Rally protocol, which is our multi-chain software suite that enables token economies for multiple consumer apps. And we utilize DeFi on the back end to help contribute to our token bonding curves that would enable multiple functions and activities for different use cases to redeem within inter platforms. So we're always looking for ways to help facilitate conversations and funding projects that want to take account of DeFi and throw that into consumer apps building on that front.
Fantastic. And I've actually known about Rally for a long time, so my bad on saying Relay there. So thank you guys all for joining. My quick background, I'm the founder and CEO of Catalyst Global. I've been in the space since 2017, worked with over 45 projects at this point in various capacities, including marketing, go-to-market business strategies, growth, working with the likes, everyone from Origin to Synthetics to Versus, Anchor, and so on and so forth. So been around the block, as Justin was saying earlier, and love to be a part of these panels, love to speak on them and moderate them. So we'll get right into it. So first off, I think we'd love to get all of your takes on really the state of the current DeFi market. As you know, the overall DeFi sector lost about $20 billion in value last quarter. And so right now, according at least to DeFi Pulse, it's hovering around $42 billion in TVL. So at its peak, last year, at the end of last year, the TVL and DeFi total value locked was around 106 billion. And today's TVL puts it at the entire DeFi industry from TVL perspective, about the same size as NASDAQ listed CrowdStrike, well-known cybersecurity company. So everyone obviously knows and has talked to the ends of the earth about the collapse of Terra and 3AC and everything going on with Celsius bankruptcy and whatnot. But love to get your take on, now that we're through that and maybe some more liquidations to come affecting the space. What is your current take on the near-term prospects of the greater DeFi market, and then DeFi on Solana in general? And then maybe we'll work backwards, going with Amin.
Yeah, I can, speaking on my personal assessment, I just take into account of like what percentage of token value locked is already in place in different protocols, and kind of like way in between like the last 2 years when a lot of the activity was happening on Ethereum. We're still, and I was just pulling up on DeFi Llama that we have about close to like, it was like 2.7, 2.8 billion already locked between like things with Serum, Radium, and it's really intriguing to see the dynamic of how much of the activity is like, even though the amount has reduced, but the trajectory of where the capital is being deployed for other protocols is at least an encouraging sign for me, is saying that a lot more experimentation is helped and needed with seeing the different types of utility that can be processed for, like, specifically even for DeFi platforms that are like used specifically for different activities, whether it's for gaming, things for running for NFT projects, running on that, like borrow and stake behind on that front. So I take into account like with the amount of like play that we're having, we're still like, we have in general habit of taking account of what with the downfalls that have happened with Anchor, but a lot of the on-chain activities on DeFi in general have still remained intact activity wise. So there's a lot more personal assessment that we're taking into account on our projects, and seeing like at least positive mainstream flow on that front.
Yeah, no, makes sense. Whoever wants to jump in next, feel free. I love.
Yeah. Without going too deep into the whole centralized side of things, DeFi performed just like swimmingly when all those institutions were collapsing, and I think that's like indicative of DeFi in general. You need to basically be able to liquidate people on demand, but like I think in the wake of it anyway, like it's like everyone's like, all the builders are stuck like picking up the pieces, like trying to look at like what is actually useful here, and like what do we need to what do we need to build, and like what do people actually want? Because like the age of all this like really easy yield is just gone. Like it's not going to come back anytime soon, and like so that means like where's the yield going to come from? Like and I think that's like the thing that everyone's grappling with, and like I don't sit here and profess to have the answers, but I think it's going to come from like the next leg up, and who can sort of find like good users, like who can maybe start creating exogenous uses for DeFi versus just like purely speculative reasons. Because I think that's like for the past 2 years it's been purely speculative, and for me it's like, how can we bring on people who want to borrow and lend for external use cases like commercial lending, which drives economic growth? It's like that's the important thing to me about extending DeFi beyond just DeFi. And like if you look at Solana right now, maybe it's just like yield farmers and some dust, because there's really not that much left over in the wake of all this pain. And like, is it going to get better? I'm almost like 100%, pretty much 100% sure it's going to get better. It just takes some time to sort of wiggle out of this stuff. And so yeah, I'd say in general, it's like finding product market fit, like finding the people who want to borrow for more than just speculation, and like trying to link those with lenders. And that's sort of like, it's basically like the perennial goal for Jet protocol right now. We're just on the hunt for that.
Yeah, I like that. Before we can go to Dan, I was just speaking earlier with a friend of mine who's talking a lot. There's a lot of buzz, obviously, with interest rates and everything else around home equity line of credits. And what about doing interesting commercialization things like that, and doing it in the DeFi sense and on the blockchain could be very, very interesting as just like one commercialized case where you can really onboard masses, but do it in a way that there's a product market fit through all market conditions.
Yeah, like supply chain investment, which I've been thinking is interesting, like given the the wake of the pandemic. But yeah,
absolutely. Dan, love to hear your take on this.
I think for one note is the whole home equity lines and even more simplistically, like got to figure out how to do mortgages because as you know, I can tell you, being buying a home and trying to get a mortgage when 99.9% of your net worth is in cryptocurrency. Even in liquid cryptocurrencies, it still doesn't matter. So a couple thoughts on that. One is, look, like, as Will said, so much of what was driven in this like kind of second wave of DeFi was really around speculation and tying it back to kind of the derivative space in the world that I come from. That speculation largely is what drives funding up, and funding, when you extrapolate it out through a treasure or like a yield curve, even like on a Bitcoin curve, the interest rates go up. And so it gets more expensive to borrow, which makes obviously more of a lender's market at that point. And when you have a crash, and the kind of the air gets let out of the move, that curve flattens, and then yields go flat. And when yields go flat, lending gets boring, and so it's pretty interesting how there is this very heavy correlation across the the lending complex in DeFi and the derivative space in DeFi, very, very much tied together. So how do we move forward with it? Again, there is going to be these are cyclical markets, and we've all been here for a while now, and at least been through one. You're in one bear market, maybe coming out of beginning stages of coming out of it now, very early stages coming out of it potentially. But if you've been through, 2 or 3 of them, you start to understand that you're trading, assets that have extremely high volatilities relative to traditional assets, and those high volatilities mean that the swings are going to be big, even on longer term, like on longer, when you're looking at longer term historical volatilities, and knowing full well that a 70% peak to valley move, or 80%, or like in the case of something like Solana, even at 90% is pretty much par for the course in a way, and you have to be prepared for it. And it cycles, and there will be new drivers. One thing that I do think that came out of this last cycle, obviously there was a lot of this like inflation-based yield capture that kind of perpetuated money growth in the space. This next wave, I believe, is going to be much more tied to value accrual, where some of the more serious projects that that have networks, that have tokens attached to them, hopefully starting to find ways to tie back network, like whether it's transaction fees or what it is, and circling that back into its own ecosystem, and creating yield that is like more organic and less inflation driven. And I think to the extent that we start to see more creativity around that, with network ecosystems around staking and rewards, and how you reward your contributors to your network through the efforts that they put into the network, and extracting yield that way, I think will be a very good catalyst going forward. And obviously, I'm saying this a little biased, but it's something we work on heavily with Hxro Network. But I've seen it even in the non-Solana ecosystems, like on GMX and some other interesting projects that are doing things around more value accrual based network economics. And I think that you'll start to see those be taken more seriously. And little more concentration of activity in those protocols, and then hopefully the yield starts making sense there, and that can be a good catalyst to another leg up in DeFi.
Yeah, absolutely. And yeah, I agree with, I like all your points. And then the insulation that really true DeFi drives versus the centralized DeFi, as many are calling it, definitely gives us a lot of advantages in terms of driving the future and in that regard as well. So switching gears a little bit, I wanted to get into DeFi and DAOs, and both of those really have obviously taken off over the last couple of years, especially since the DeFi summer back in 2020, 2 years ago now. Time has flown. So as we seen last month, right, with Solan's almost near liquidation event, that is, for those that may not be familiar, that's one of Solana, a pretty prominent, or at least well-known Solana-based lending platform. They had a near liquidation event. That left many people in the space questioning how decentralized DeFi protocols really are, and while others were calling in saying it's time for more regulatory oversight even. So with that in mind, love to get whoever wants to speak on this. Really, what would you in your mind be the successes and failures of DeFi DAOs, and ideally what should governance look like for DeFi protocols going forward?
Yeah, so that was a big failure. I don't even think it's a DAO. Like, you had just this, you had a voting mechanism bolted on to that situation, and you had one huge whale dictating what the protocol could do. Withdrawals of USDC were, capped. You couldn't do it. You couldn't withdraw anything. And I don't see that as decentralized at all. I think that's just, total failure of ensuring your protocol is at least has a diverse set of borrowers and lenders and can render a decision quickly, or just get out in front of the decision before it becomes a problem like that with proper risk parameters. And for me, I come from Maker DNA. I worked at Maker 2019, 2020 when DeFi just exploded and there were just growing pains abound, namely March 12th drawdown, where Maker's liquidation mechanism broke down and someone was able to corner the market and liquidate basically lots of 50 ETH for, one way. So less than a penny. And a lot of this stuff, you have to have a process for making decisions, and you have to have everyone understand that there's a process, and you have to have a certain amount of time to debate something. And we built that at Jet, focused a lot of time into decision making and building, a legal wrapper around the DAO, so that we can in the future conduct DAO to DAO lending or DAO to DAO transactions. And a lot of this stuff, people they just overlook it or just think it's not important because it's a DAO. You just figure it out when you get there, but that's not the case. And I've always felt really strongly about that, because in DeFi, it's when things go wrong, they go wrong really quickly, and you have to have a plan. You have to have a backup plan, and maybe even tertiary plan. It's you basically live and die by the code that you write. And it's you just have to be very, have a lot of attention to detail and planning. So, for us, it's we focused on planning for the long haul, right? You want to build a protocol that can withstand the test of time. You want to build a DAO that can render decisions that aren't just kangaroo courts open for a couple hours, and and then you conclude, and then there's this arbitrary decision on something. I just think that's a bit of a farce, and it's not really a DAO. And I don't know, it's more of a call to action. Is these types of networks are very important, and I think they're the future essentially, and they're at least the future of the financial settlement and financial networks. And it's it takes time to get them right, and I think we should all challenge ourselves to just be better at building these types of things and processes for coming to conclusions.
Yeah, and having that foresight, like you said, to see through and making sure that the governance is not in the hands of just one or even just a few, that there's kind of proper levers there as well in advance for any scenario that might come up that needs immediate action. So
yeah,
100%. I mean, love to get your take on this.
Yeah, absolutely. I actually was just recalling from, it was a post that Vitalik actually posted last year. It was based on moving beyond coin governance and essentially transitioning from DeFi to DGov, which is like exploring the design space for governance and solutions to keep voting and DAOs safe in this case, especially in correlation with voting and DeFi structures in place. So I think that the danger that there could be is like essentially the inequalities, that the incentive misalignments, that even in the absence of attackers, including with like outright attacks through various forms with often obscured votes, but like just what happened with Solana. So I mean the dividends like take into account is like the needs of taking account of like limiting governance to fixed parameter choices. Like I know Uniswap has done this, just to allow governance to affect token distribution, and having a little swap fee on that front, or adding like time delays, especially like a decision made being by basic stuff that would affect like how much of tokens being pushed. That weight, depending on changing on how how token weighs the amount of votes that are being placed, so just ensuring governance is like well driven with non-coin driven governance in this case, and things like what I take into account with like proof of humanity and Bright ID attempting to do this. So like having systems that verify accounts to people in this place in this case, and along with like proof of participation with skin in the game, and taking into account of how the correspondence of votes on precipitated in some events, and having at least have performed some useful work in the ecosystem in regards of using like malicious voting in retrospect of attacks being dealt on DeFi. So I just take account into a hybrid approach, in which like we have like proof of participation that is more closely aligned with overseeing the well-being of the DeFi structure and protocols being built, and then having incentives of users, and taking into account even for users like playing in like consumer apps with DeFi embedded, like there actually is specific engage to earn mechanisms that harness and ensure more honest governance votes down the line, and that's something that we've been overseeing on our end as we trying to facilitate more activity with DeFi Titan as a pillar in the DAO governance activity. So that's personally my take on that front.
Yeah, there's a ton of levers with governance, like you described, right? Do you set up a delay for 24 hours? And for example, you have a 24-hour delay. If you want to change something, you basically queue it up, and then you have to wait 24 hours, which is like a hard decision to make, because what if you have a bug? Because then you're going to put some bytecode on chain, and it's going to sit there for 24 hours, and there's going to have a bunch of sophisticated black hats who are like, dissect that to see what you're patching, and then they'll exploit it before the bug is fixed. And there's intricate ways to solve that. Like, for example, you can pause oracles, or like you have these like levers where you can change one thing on a quick vote that doesn't require that delay. But it's really like an art form, and like you don't really retrofit, or you don't like governance system of like the United States wouldn't translate well to like to like Canada or like any other country, right? Like you build these things incrementally over time, and each protocol like is the input, or is the product of the inputs of people who are there, like, moving things around, like building things, like, and like it has to be codified in that way. So it's like you have all these different levers, like how do you sort of stack them? And it's also, it's like super exciting, but it's also like, how do you solve an issue like that? Or like, how do you know when to use one of these emergency powers?
Yeah, no, you're right. And then like, how do you know when like, hey, some levers aren't working when you need to like just swap the levers or get rid of them altogether and think of something else. Yeah. So it always takes 100%. Like you always have to be dynamic in your thinking as well. It's not the constitution of any company by any means. I was going to ask, have you guys been affected at all? And if so, how have you with any of the pauses or outages of the Solana blockchain?
Yeah. I mean, in June or January, when it went offline, or when it was congested, rather, we weren't able to liquidate. But our users were able to cover their positions, which was good. So we actually didn't really have too much damage. But that's like, that sucks. Like it really does. Like it's not good. And it's, it's a criticism that, anyone who's serious that's building on Solana is like, that can't happen. And I think people look at it and they're like, okay, I'm not going to open up a big position on this network because I don't trust that it's going to be up when I need to if I'm going to get margin called, am I going to be able to cover my like margin call? And I think these solutions are being worked on, like they're identified. There's actually PRs where like the solution is there and people are working on it. And I also just sort of welcome the bear market to where core devs can be like, okay, like there's more time to focus and like take a deep breath, like really look at the root of these problems and figure them out. But yeah, I mean, every step of the way when the network goes down, like we're impacted and like it sort of changes different ways too, like because also our protocol changes. So we try to optimize for, like, for example, our liquidation process took a lot of instructions. So like after that January when it was congested and you couldn't basically send transactions, we like optimized it, but still like then we just rebuilt the whole thing basically. And it's always like a chase. There's always like it's it's like a chess game essentially. Like you're always making adjustments, and it's very strategic. You try to prepare for the worst, but sometimes like your strategy doesn't work out. You sort of like have to step back and recalibrate. And then it's like not even. That's not just the thing that happens in Solana. That's pretty much every crypto network. It's just part of the, it's just being in the DeFi trenches.
Yeah, no, absolutely. Yeah, I just wanted to get that question out there. So we have a few minutes left. I'm going to kind of combine a couple of thoughts I had here and the closing out of not only of our panel but of the actual summit itself. So, you guys started speaking on it, but I'd love to like dig in a little bit more. And that's like this intersection of DeFi and incentivization and different incentivization models, especially in gaming. So with like play to earn and other kind of engage to earn business models really taking the spotlight, where do you guys think like GameFi, catch-all term I'm using here, is headed, and what's out there that maybe still under the radar or that's being built right now in the bear market that we should be looking out for, whether you guys are building it yourselves or you see someone else building it in the ether?
No, that's really a good incentive. I'm really intrigued in terms of like looking at the current gaming culture in terms of like how we have these expos and like players players and enthusiasts come in to partake in like prizes and bounties. And in these platforms, so we're actually, there's a project that's like closely related that I was building on the Rally protocol, not personally associated with Joyride games. They're utilizing Rally in this case to have like total value locked within like one of their platforms like Solitaire Blitz in this case, and they have like a sort of a 2 token model. So they'll use the ROI token to lock into the the token value lock as a stable coin, as a utility coin, and then through the nested bonding curve, we essentially unlock the purchasing power for certain activities within those chains. So being able to buy in, like being able to have a discount or have first dibs on like NFTs that can like give you like certain power ups, or being able to we have like a contest, we can actually be able to stake a token as like a principal free, and then use the interest yielded to pay out the like contests and prizes for just playing solitaire in this case. So a basic these basic mechanisms in which we already take account with a DeFi on engaged streamer activities, but redirecting that in the space for gaming, hey, here's some tokens, lock it into the DeFi group, and we'll use that, and we'll take the yield, the payout of the prize pool per se. So I thought that that's an interesting use case that we've taken into account, and I'm sure there's going to be plenty other ways of that laid out on that front. But I think it's kind of like really retrofit, like taking account of the culture that we've seen right now with gaming, and then taking the mechanisms that have been built on the DeFi and kind of cross-checking the mechanisms for these new dynamic ways for play to earn activities happening across multiple spectrums in that front. So I'm pretty excited of where that space will go personally.
Absolutely. Well, yeah. What are your thoughts on it? I know obviously play to earn hasn't had the uptake from the traditional gaming world as many thought it would. It's slowly but surely, but there's a lot to balance there, right? In terms of at least that avenue of great games and play to earn mechanics, without sacrificing one or the other. At least that's where we've been for a bit now. Yeah.
So I consider myself a gamer. But I've never, I sort of have this just laser focus on DeFi, but I never really take a look or poke my head into somewhere else and be here's what's going on here. There's just so much going on in crypto. It's it's insane. But on that same topic though, there are concepts I think that translate between DeFi and GameFi and just anything in general. And so one concept I really like is PCV, protocol controlled value, or POL, protocol and liquidity. Same thing, same concept basically, but you have some value that's controlled by the protocol, and is it controlled by the DAO? How is it controlled? And who control it? What are the levers? And then what do you do with that? Do you, can you use that to fund some game development, or fund this project, or lend money to this, or invest in this? There's always there was that run up in time during the bull market where there was the protocol and liquidity hedge funds, which is an interesting idea, but sort of had runaway hype for a bit and then sort of came back down to earth. But it's a super interesting concept that I think will be explored in great detail, and people will scratch around and scope that out and how it can be used more effectively over the next several years, maybe even earlier. It's and I think that's not just a DeFi thing. It's crypto network thing, and how do you use that to deploy funds? You could be a nonprofit, deploying funds and as a charity or something. But it's a very interesting concept, I think, that has emerged but hasn't really been tested at scale yet. So yeah, that's what I'm excited about.
No, absolutely. So this has been very insightful for me, hopefully for the audience too. It's our 30 minutes have flown by, so really appreciate both you guys. And like they say, right, bear markets are for builders, bull markets are for speculators, and builders too still. But so thank you guys for joining. If anyone wants to reach you guys, learn more about Jet and Rally, can you give us a little information on the best approach?
Yeah, so Jet Protocol, at Jet Protocol on Twitter, and at Will Barnes on Twitter. At Jet Protocol, you can find all the digestible, easy to use updates about what we're doing, what we're building, and our borrowing and lending platform.
Awesome.
Yeah. You can reach. You can learn more about and reach us at rly.network. We just literally launched the site earlier this month, describing on our developer docs. Our Twitter, RLY_DAO for our DAO activities. My personal Twitter, Iman 89, the numbers. So be happy to connect with any of you guys here.
Absolutely. And if anyone wants to reach me on Twitter, Simon Bog, Simon B-O-G, catalystglobal.io, also Chief Strategy Officer of Gravity Ventures, Web3 Venture Studio out of Dubai as well. So gravityventures.io. Thank you guys all. Thank you again, Justin, David, Esther, and the whole Dcentral team for having us here on DeFi Summit. And that concludes our panel here. So thanks, guys.
Yeah, thanks, guys.
Appreciate it.
No, thank you.